In this video, we want to take a look at some major downside action in the New Zealand dollar. Earlier today, overnight, we had some comments out of New Zealand that indicated the intervention that we saw during August of this year by New Zealand monetary authorities was the largest since July 2007. Approximately 521 million New Zealand dollars were sold, and the markets are interpreting that as intervention. So we have seen some major official moves lower, rhetoric, verbal intervention from both RBNZ Governor Wheeler and also Prime Minister Key. This is our proprietary New Zealand dollar activity index. We can see on a daily basis in recent days the Kiwi has been significantly weak as it has been in several months. When we look at this index on a weekly basis, we can see that we have not seen this much weakness since approximately October 2013. And when we look at this on a monthly basis, our proprietary index, we can certainly see that we have not seen any weakness like this on a monthly basis since May 2013. So quite a lot of selling activity in Kiwi. We want to go ahead and get some perspective here. This is a daily chart of the New Zealand dollar against the US dollar. We see significant selling activity. We're approaching lows that we have not seen since the middle of 2013. On a weekly chart here, we can see we're approaching those levels from 2013 that we just talked about. That 76, 77 area there is important for technicians. And looking at our monthly chart here, we can see that we're well below the 50-month moving average, and we're coming up to the 100-month moving average. Let's go ahead and take a look at some cross rates very quickly. You can see the Euro Kiwi cross here. You can see we've not been anywhere near this level since earlier this year, probably February or March 2014. Taking a look at the weekly chart, we can see we're coming up to an important moving average here. The market has shied away from that on the cross. And on the monthly chart, we can see we have a downtrend line to contend with. This is the Kiwi Yen Cross. We can see we're right around this key retracement level here. Any lower, we'll want to test the 83.42 area. Moving over to a weekly chart, we can see 84 figure here is our next key downside area. We're definitely below the 50-week moving average this week. And again, we see some bearishness on the monthly chart with, we're going to go ahead and extend that trend line to contend with. Let's go ahead and take a look quickly at the British pound New Zealand cross rate here. You may say to yourself, why are we even looking at these cross rates? This New Zealand dollar has been weak across the board. It really doesn't necessarily matter what you're trading. There, of course, is a finite supply of New Zealand dollars in the market, and that's one of the reasons why the New Zealand dollar has gapped and moved significantly. Here on this weekly chart, 2.1157 looks to be some upside resistance on the sterling Kiwi cross. And you can see we're right around levels we've not seen since 2012. Above this area, we will get into areas not seen since 2011. So definitely some things to watch on the Kiwi cross against the British pound. Looking at New Zealand Swiss franc, it's obviously much the same story. We're getting down to levels we've not seen since February or March of this year, as we can see on this daily chart. On the weekly chart here, we can see this 73.36 area was support today. That is a key retracement level. We drew a blue up arrow to illustrate that. It's very important to watch these cross rates, even with instruments like the New Zealand dollar. Here we can see a monthly chart. This dates back to 2013, the high and low from 2013 to the present. You can see that our monthly low here was right around the 73.36 area. That is today's intraday low, in fact, and we've climbed about 35 points since then. So some of these longer period cross rates are giving us some very important clues. We're going to go ahead and take a look at the Australian dollar against the New Zealand dollar. That, of course, was our trade of the day. We made a notional 100 pips on that cross. Here we can see the 112.70 area was a key upside area, along with 112.95. Finally, moving over to the monthly chart, as we saw in the trade of the day today, this illustrates this top level today high very, very well. This 112.70 area, very important technical resistance. We took out that level earlier today. Finally ending up with the New Zealand dollar, Canadian dollar cross rate. You can see that we tested some key support levels today. Those support levels actually date to 2010, roughly the low from the middle of 2010 all the way up to the high of 2014. So we got to these levels today. This 86.18 area was just above our intraday low. So a very key area to focus on. We're about 30 points above there now. Just like we saw in the New Zealand dollar Swiss franc cross, this is the New Zealand dollar Canadian dollar cross. You can see this 85.99 area was some support today. We drew a blue up arrow there. And finally, taking a look at our monthly chart, you can see earlier this month we took out a key level, this downside down trend line. So New Zealand dollar remains our biggest mover that we are focusing on in the FX markets. Let's see if this trend will continue through the end of the month and into October. Thank you.